Hello, we're back talking about financial applications, and I want to just ask the question, how do I maximize my income? Great question in several contexts. But let me take an example in sales, since I've introduced some equations for sales: income, revenue, and cost. And I forgot my little P here. Cost of purchasing is what I defined it as last time. The income is the revenue minus the cost of purchasing. The revenue is the price per unit times the number of units sold. So this is the price you're given to your clientele. This is how much they're paying for it. And then times the number of units sold gives you your total revenue. The cost of purchasing is the cost per unit. This is your buying cost. Cost per unit times the number of units you bought plus some initial cost, if any. So for this example, actually, let me just say that they gave us a break. There was no initial cost. That'll be nice. So that the cost of purchasing is just the cost per unit times the number of units we purchased. And I've made a couple tables here to represent something that you sell, I don't know, some high-tech widget. And if you sell that widget for $600 for each one, then you sell 5 units, let's say in a month, okay? But if you reduce the price to $550 per widget, then you notice that your sales bump up a little bit and you get 10 in that month. Well, it turns out, it seems that every time you reduce the price by 50 bucks, you get 5 more purchases of that thing. So that's what this table represents. Let's also look at the cost. You know, when you start buying more things, you tend to get a reduced cost from the person selling it to you. So let's just say that if you buy 5 of these things because you're planning on selling 5 of them, it only costs you $500 from this giant manufacturer, whoever you're buying them from. Okay, but if you buy 10, they'll reduce the price to $475. If you buy 15, they'll reduce it to $450, and so on and so forth. So it seems like every time you buy 5 more, they'll reduce the price to you for each one by 25. So what do I do with all this information? Really, remember, I'm trying to maximize my income. If I want to maximize my number of sales, that's real easy. Just keep reducing the price. Shoot, eventually you could just sell it for nothing, right? And people will take it off the shelves. Or maybe for $1. There's a weird psychology there. Well, but that's not going to maximize your income. At least it doesn't seem like it. So let's try to analyze this as a whole. And to see what our income should be, we need the revenue and the cost of purchasing. So let me just make an additional little column here. Since the revenue relates to how much we're selling our widgets for and how many of those widgets we've sold, I'll put my revenue over here. And all I have to do is multiply these 2 quantities to get this. 6 times 5 is 30. Let's add our couple zeros. Okay, so that would produce a revenue of $3,000. And I'll just say this is in dollars. 550 times 10, 5,500. Wow, that's squeaky. Let's try another one. 500 times 15. Here, this one's easy. 450 times 20, 45 times 2 is 90. Stick on my extra zeros there, 9,000. Notice how I glossed over that. 5,000 plus 2,050. Am I saying it right? Okay. I'm going to embarrass myself here and use the calculator. There we go. 7,500. That's right. That looks great. And 400 times 25. Let's see. Let's stick 100 there and stick on a couple more zeros. 10,000 is what we get from that. So there's our list of revenues, and it's clear that our revenues are going up as the sales are increasing, even though we're dropping the price. Now at some point that's going to have to turn around. Let's see about this one. 500 times 5. What am I doing here though? I want to know the cost of purchasing. All right. What's with these squeaky markers? Okay, so the first one gives me 2,500. If I multiply these 2 quantities together, and I'm saying that there's not an initial cost involved for these things, Okay, the bottom one, I like multiplying by 10. You just stick a 0 on it. Okay, 450 times 15, 450 times 15, 6750 is how that comes out. 425 times 20, that shouldn't be too hard, 8,500, but I used the calculator anyway, and that looks okay. And then 400 times 25, there's my 4 times 25, add those 2 zeros there. Okay, so also $10,000. Well, I think right away you can see something interesting here. Here's my cost of purchasing in dollars. I guess I'll stick that on there. What you can see that's fairly interesting is, yeah, your sales were going up, they were booming, your revenue was increasing, but ouch, take a look at these two. If your revenue and your cost is the same, you didn't make any income for all that work. So you certainly don't want to do that. Let's take a look then at the income, of course, in dollars. And I'm just going to use the same figures. Now, I think I need to assume something here. Let's say that we want to sell everything that we purchased. So the number of units purchased in a month, let's say we want to get rid of those exactly. So if we purchase 10, we want to get rid of 10, we want to sell 10. We purchase 15, we want to sell 15 in that month or whatever time period you're considering. So how could I get the income? Well, that's pretty simple. Using my equation up here, the income is the revenue minus the cost of purchasing. So I can take all the revenues from these columns, matching up the number of sales with the number of units purchased. The revenue minus the cost of purchasing equals the income. So for the first one, it looks like we end up with 500 bucks. 3,000 minus 2,500. How about the next one? 5,500 minus 4,750 is exactly $750 of income. Next one, 7,500 minus 6,750 is exactly, again, 750. Okay, 9,000 we made with 20 units minus 8,500. Okay, so there's a 500 bucks for that one. And of course, we made 10,000, but we paid 10,000 for the last one for 25 units, so we have a 0 income there. So what do I get from this basic analysis? And let's call this a discrete analysis. I'm saying discrete because I'm going up in units sold of exactly 5 numbers of units sold. And I'm purchasing in exactly 5 units sold. Maybe there are more options than exactly 5, and we'll consider that in the next video. But for now, I just want to say, what's our simple analysis here? Well, it looks like we have 2 choices for maximizing our income. It's either this one or this one. And it really depends on your business, but I would say probably the one with 10 requires less work. You bought 10 items, you sold 10 items, you had to warehouse 10 items. I don't know how you do that, but probably that would be the nicest choice for this. But really there are 2 solutions. For 10 units purchased and 10 units sold, let's say they're the same, then you're going to make 750 in this example. Same thing for 15 units. Now there may be a number that's better than that though. Maybe 9 units, maybe 11 units, maybe 14 units, maybe 16 units. Maybe we can do slightly better. So hang on, in the next video, I will present a case for how we can determine exactly how many units it's going to be.